Picture this. You are super rich and an elite person who wants to control the whole population to work very hard while you secretly benefit most from an entire nation's hard work. Well, wealthy banking tycoons in the early 20th century did exactly this. And the craziest thing is, it was and still is a huge problem. In fact, banks don't want you to know this because we've been taught owning a home is the ticket to riches. Picture this. You are a bank in the early 1900s and you want to make more money. Your bread and butter is mortgages. People take out a loan to buy a house and you make huge profits from the fees you charge them. There's only one problem. Buying a home is reserved for the wealthier upper class, and you need more leads or cows to milk to get richer. That's because to get a mortgage you had to put down 50%, and the loan terms were only 5 years. Way too fast for a regular person to pay off the rest on average. So what did they do? They decided it would be a good idea to milk people for decades instead of just 5 years. You see, they lowered the requirements because they knew they could sell the dream of owning a home as an asset. But here's the thing, even when you pay the house off, it's still not yours. Stop paying your property tax and you'll find out who the real owner is. Asking any real estate agent whether you should buy a home right now is like asking an alcoholic whether they think you should have a drink. The real estate agent only wants commissions to sell you the home, and the bank wants to loan you the money to get their fees. And being tied to one location makes for a very predictable cash flow stream for utility companies who work closely with the financial system. Biggest advice if you already have a mortgage is from a smart financial advisor I met in college. He said, "I was 5 years into my 30-year mortgage when I realized I was being screwed by the bank. Started making aggressive overpayments. Skimped on all luxuries. It was hard overcoming the desire to spend on nice things. 10 years into my mortgage now and I've almost paid it off." Treat your mortgage like a credit card. Don't sit there making minimum payments. When you take your time, here's how the bank takes your money, like a casino. When you take out a mortgage, you're essentially borrowing a large sum of money for the bank to buy a house. In return, the bank charges you interest on the amount you've borrowed. This interest is where banks make a significant portion of their profit. They essentially print money out of thin air from you over time. And worst of all, compound interest works against you. One of the key aspects of interest in the context of mortgages is the concept of compound interest. Compound interest means that the interest isn't just calculated on the initial borrowed amount, the principal, but it's also calculated on the accumulated interest from previous periods. In the early years of a mortgage, a larger portion of your monthly payment goes toward paying off the interest, while a smaller portion goes toward reducing the principal. As time goes on and the principal balance decreases, the interest amount also decreases. This means that over the life of the mortgage, you end up paying a significant amount of money in interest, particularly if you stick to the minimum required payments. Something banks fear greatly and don't want you to do is make larger or extra payments towards your mortgage, because you're directly attacking the principal balance. This has a compounding effect in the opposite direction. As the principal balance goes down, the interest calculated for the following periods becomes smaller. Consequently, more of your monthly payments start going towards the principal, helping you pay off the mortgage faster. For instance, if you're 5 years into a 30-year mortgage and you start making aggressive overpayments, you're effectively chipping away at the principal sooner than the bank's initial projection. This means that not only are you reducing the amount of interest calculated on the outstanding balance, but you're also shortening the overall length of your mortgage. This is something you would rarely, if ever, be taught in school, because the bank uses a home as its vehicle to make lots of money. And now, since mortgages are typically long-term loans, often spanning 15 to 30 years, banks earn more interest over time because you're paying back a relatively small portion of the principal, the actual amount you borrowed, in the early years. This means they're earning a larger portion of interest in the outstanding balance the longer the loan is. Banks assess the risk of lending to you based on factors like your credit score, income, and the value of the property. They structure the interest rates accordingly, which further adds to their potential earnings. They have professionals, usually actuaries, who calculate the risks so the bank always wins. They pick a rate that favors them on a large scale. And that's why treating mortgage like a credit card is how you take control back from the banking industry. The biggest trend benefiting banks even more now is the rising cost of housing. This causes people to delay their purchase of homes into their 30s and sometimes 40s. A 30-year mortgage makes more sense if you're buying your first home in your early 20s, but is a much riskier proposition if you are buying your first home in your 40s. On top of that, because America sold us the dream of home ownership, the real issue is out-of-control home costs, which people do anything to justify since it's such a huge identity for Americans. You see, we have been sold this idea over and over. Everyone's buying homes that are too big for their income and budget and using the 30-year loan in order to finance something that they couldn't afford in the first place. And this is part of the financial system to keep you working and predictable. We are sold the idea of homes and are educated in an evil way. The financial system is not new to controversy, and it has a long history of exploitation and corruption. In the early 1900s, industrialists and businessmen such as John D. Rockefeller, Andrew Carnegie, and J.P. Morgan began to funnel their wealth into education. They funded universities, medical schools, Ivy League schools, and public high schools, resulting in America's love affair with college degrees. College graduation has never been more valuable than it is today. And soon, other business tycoons started jumping in on the action. By 1905, Andrew Carnegie, the steel magnate, founded the Carnegie Foundation for the Investment of Teaching, not because he wanted people to learn about the world and become innovators, but because he needed mine managers, operators, engineers, repairmen, smelters, and railroad conductors. Despite being capitalistic, most of America was still rural, and most people worked on farms. They didn't know how to work in a bank or on Wall Street. They weren't conditioned to clock in and out or to chase after money. So you needed a way to educate the population on a massive scale so that they could come to work for you. But you didn't want to educate them too much now, did you? Remember, knowledge is dangerous. There's a reason why slaves weren't allowed to learn to read and write. If you're going to educate the masses, you have to tread very carefully. Teach them too much, and they'll become too ambitious, too independent, too much of a threat to your wealth and power. Instead, you want to teach them just enough so that they can keep their empire running smoothly. You want them to be loyal, obedient, and easy to control. So what do? You help pioneer the modern-day financial education system. You created business schools, accounting programs, and finance degrees. You funded scholarships and grants to entice young people to study money and banking. All of a sudden, every young person could just enroll in a free university program funded by good old banking tycoons like yourself. To the rest of the world, you look like a saint. You're giving free education to all those uncivilized, ignorant Americans. But you and I know the truth. By dangling the prospect of a free education in front of millions of young people, you are able to trick them into relinquishing their dreams and ambitions to the banks. That way, for 4 to 6 years of a student's most formative years, you get to condition them to be exactly who you want them to be. You get to decide what they learn and don't learn. You get to decide how they see the world. You get to condition them to be scared, to be fearful, to be obedient, to not question the status quo. You get to teach them that if they don't follow orders exactly to the T, they are a failure. Because these are the traits that make for a good banker, a good financier, a good employee in the financial industry. And it works. By giving every young person access to free, standardized financial education, you were able to solve the labor problem in America. Now, every generation that came after it would go into school filled with innocence, creativity, and joy, and they would come out of school as an obedient worker that doesn't want to rock the boat. The modern financial education system is predicated on the idea of academic ability, and there's a reason the whole system was invented in the early 20th century. It all came into being to meet the needs of capitalism. Ah yes, our entire financial education system today was created because wealthy banking tycoons needed more workers. But it wasn't just the banking tycoons. Loads of other wealthy American dynasties poured billions of dollars into creating the modern-day financial education system we have today. These are the same wealthy families behind big oil, big food, big pharma, and they all wanted to provide you with free education, while they sent their own kids to Ivy League schools. As one wealthy financier once said, "I don't want a nation of entrepreneurs, I want a nation of workers." And that's exactly what they got. But what does this mean for us today? Well, it means that the financial education we receive in schools is not necessarily designed to help us become financially independent or successful in the long run. Rather, it is designed to make us good workers for the financial industry, to keep the capitalist machine running smoothly. One big item on the agenda is to buy a house because it's the big American dream. The American dream is a concept that encapsulates the ideas of success, upward mobility, and prosperity that many people associate with life in the United States. It has become a fundamental part of American culture and discourse for decades. Owning a home has long been a symbol of achieving stability, success, and fulfilling the American dream. It represents not only a place to live, but a valuable asset and investment. But I want you to tell me, do you agree? The American dream envisions that education is a pathway to better opportunities and socioeconomic mobility. It suggests that access to quality education can help individuals rise above their current circumstances and achieve their goals. But what if you can learn many skills yourself and enter the market without wasting time and money to learn one skill? But instead, education takes a long time and teaches us to enter one specific job in most cases. It means that many of us come out of school with a very narrow understanding of money and finance, and we are not equipped to navigate the complex world of personal finance. Furthermore, the financial education we receive is often incomplete or biased. We may learn about the benefits of investing in the stock market, for example, but not about the risks involved or the potential downsides of this strategy. We may learn about credit scores and the importance of maintaining good credit, but not about the predatory practices of the credit industry or the ways in which debt can be used to keep people trapped in poverty. That's especially true of a home. Homes can enslave people when certain conditions like homeowner association fees, property taxes, and maintenance and repair as well as insurance costs add up. And did you know the public started to catch on to all this big money moving into education? And by 1914, the National Education Association said that we deal with the Lord the activity of the Carnegie and Rockefeller Foundations, agencies not in any way responsible to the people, and their efforts to come to our state educational institutions to fashion after the conception, and to standardize our courses of study, and to surround the institutions which conditions which men is true academic freedom. But infiltration of education had picked up too much steam, and there was no way it was going to slow down now. By 1918, every single state started requiring kids to complete elementary school, and it just picked up from there, from standardized tests to the Carnegie-funded textbooks to the Department of Education to labeling and medicating kids that don't do well in this Rockefeller model of education. Frederick T. Gates, whom John D. Rockefeller created the General Educational Board with, put it perfectly when he explained what he envisioned for America's education system. In our dream, we have limitless resources, and the people yield themselves for perfect hostility to our molding hand. The present educational conventions fade from our minds, and unhampered by tradition, we work with our own goodwill into a grateful and responsible rule folk. We shall not try to make these people or any of their children into philosophers or men of learning or of science. We are not going to raise up among them authors or writers, poets or men of letters. We have not searched for embryo great artists, painters, or musicians. Nor will we cherish even the humbler ambition to raise up among them lawyers, doctors, preachers, statesmen, of whom we now have an ample supply. Rockefeller wanted an education system that didn't search for the intrinsic gifts and talents in each of us, one that didn't pump out philosophers, authors, artists, or musicians. No, our modern-day education system was designed for one thing and one thing only, to pump out mindless, thoughtless, standardized, dare I say, slaves. John D. Rockefeller put it even more succinctly. I don't want a nation of thinkers, I want a nation of workers. And if you look around today with all the fear, all these debts, all these years of education, and yet you come out not even knowing the basic fundamentals of how to survive in this world, like how to find a lifelong partner, save, make money, invest, and file taxes, then you can see that Rockefeller got exactly what he wanted. So how do you escape this systematic design of society to get you to slave away forever? You find it by finding a way to make a lot of money without having to work super hard like all the other docile workers. Or you simply start using money to make more money which scales infinitely. One way is lending money, another way is option trading. We have an ebook on option trading that you can get in the description. Let us know, would you rather own 3 homes or have $10,000 a month and have the flexibility of renting? Thanks for watching. Would you rather have the bank take away your home after finally paying off your mortgage, or have to climb Mount Everest once a month for the rest of your life? Let us know in the comments section below.